Okay, welcome to today's Chartist Corner strategy session. It is Wednesday, June 9th, 2010. My name is Fan Yang. I will be your instructor. Chartist Corner is a technical look at this week's action using tools such as moving averages, the RSI, Fibonacci, Elliott Wave Principles, and others taught in the power course. So before we get started, hopefully you guys had time to finish this important disclaimer. This is an educational session, not trading advice, and we should get started. Okay, so let's start with the euro dollar as always. Here, let's, as the market stays in a very choppy ranging mode, let's take a look at the wider, bigger context. We may be in an ABC of a larger. Okay, so ABC pattern is possibly the primary count right now, and that means we're in the C pattern, which could be which means it's an impulse wave. Looking at the daily, this is, these are all possible counts. Basically, we may be done with 1, 2, and this may be a third wave of our C wave. So we may be in the middle of the third wave of our C wave. The speed of this decline is makes me inclined to categorize this as the third. So within this, there could be a couple of counts, 1, 2, and then a third wave. Within this third wave, that means there should be a very sharp decline coming following, and right now we have a little pause. So if this is the third wave of the third wave, there should be a very, very strong decline. So let's take a look at the 4-hour time frame. We were in the previous week in this triangle pattern, broke out below 121.50, 121 area, and the market has paused again in this little wedge. So you see that in the 4-hour time frame. The count is not resolved in this wedge at the moment. Okay, so this sort of rising channel, as it has developed, we have a strong move. It's coming back down, so we should just wait until this pattern completes, and see within this. So 1, 2, and then here 1, 2, 3, 4, and then 5 to be your third. Right now this wave is it's getting very choppy and very twisted, and it's usually best to come back and resolve the waves when they are complete. So very twisty, but in the bigger picture, we do see that we are in a in a C wave, which is an impulse wave down. Okay, so basically, not much reason for the moment to think of reversals. Instead, we should be maybe thinking of continuation, and just continue to monitor for this count. Basically, if we do have this continuation, a very strong move, then yes, that third wave is upon us, and that's what I'm anticipating. Okay, in pound dollar. Okay, so here, again, also in the C wave, a larger C wave. So 1, 2, 3, 4, and maybe fifth wave. We're in the middle of the fifth wave. Okay, and this fifth wave, 1, 2, 3, 4, 5, is a possible count. Okay, so right now you have this negative reversal, suggesting a decline to 1.40 in the daily, but we do have some, this support is still supported at the moment, still respected at the moment. moving to the 4-hour time frame, you see this support here at 1.4250, and the market again, as I was saying, is very choppy. So there's not much for me practically to try to mark all the waves within in this internals. It helps to try to mark them to anticipate the completion, but keep in mind that many times you will have a complete count and the market is actually in a bit more complex correction. So that may be that actually there were a couple of times where I felt like, for example here, I felt like the market may be complete with this correction to the 61.8%. So it comes down. I mean, it may be complete, but you need some confirmation, and one confirmation would be the break of this rising trend line, which the market has not been able to do. So we are in this maybe head and shoulder pattern here. So it has to break this rising trend line, and then we may have a continuation decline towards as suggested here, 140. Okay. Okay, so I'll just move on there. Dollar Japanese yen, not too much change. The market stays choppy, and in the weekly you see we are pretty much in this between 95 and 88. Here 95.88, we have this possible projection to 88.30, basically to test this 88 low zone because of a reversal, negative reversal. Okay, so that's the projection right now, 88.30. We had to wait for confirmation, which in the 4-hour time frame we may be getting. We had this correction, and now the market broke this rising trend line, much like, okay, so here we are much like the pound dollar. We saw a head and shoulders here in this consolidation. We also see a head and shoulders. So this is another line to break for confirmation to 88, 88.30. But as you can see, all these projections, all these outlooks are within the context of consolidation of this correction. So they're very limited. And look, you may have to look at here, for example, the 1-hour time frame. You see, let's see. Here we have this correction. So what could be, this could have been is A, B, and then this could have been a C pattern and completed C pattern, which is now breaking down. So this, just looking at it from patterns, from a breakout point of view, we've broken out of this channel, broken below this 200 moving average, and the market here is testing it in the 1-hour time frame. Using a 1-hour time frame, if we're gonna use 88 as the target, because we need to see here we have this head and shoulders pattern, so it still needs to break this neckline, and then we would have a projection to 88, possibly a stop somewhere up here, or I should say a zone of invalidation. If the market breaks above this sort of resistance zone, actually you could use the dynamic now resistance of the 200 moving average as a reference, so you could put a couple or 3 ATRs above this moving average, and then your target could be at 88. So that's one approach for this very short-term outlook.